For tariffs to be able to act as a negotiating tool, they have to have some bite. They have to be believable.
Good evening and welcome to Market Moves. The 25% tariffs on Mexican and Canadian goods set to take effect tomorrow have been paused after negotiations. New tariffs on Chinese goods are still in play, but things are evolving very quickly. So I want to bring in our chief investment strategist, Marta Norton. Marta, what's behind this aggressive move from President Trump?
Trump is fulfilling campaign promises. So, as he's talked about tariffs, he's looked at them in three ways. One, to raise revenue for the federal government, another, to correct trade imbalances, and a third, as a negotiating tool. And when we take a look at the news this weekend and early this week, when it comes to Canada and Mexico, Trump has specifically cited border security and also fentanyl making its way into the United States. When it comes to China, he's similarly cited fentanyl and also China's activities around the Panama Canal.
It seems like these tariffs are more of a negotiating tool than anything else. Trump's team got exactly what they wanted at the negotiating table with Mexico and Canada, then immediately hit pause.
It appears to be the case. I'd agree, a negotiating tool. But when it comes to what Trump has announced, I think it's very important that the markets and trading partners take these tariffs seriously. First, for tariffs to be able to act as a negotiating tool, they have to have some bite. They have to be believable. And second, Trump has cited tariffs as a way to raise revenue, as I referenced earlier, which would mean that they're part of a long-term strategic plan for U.S. economic policy. Now, activities recently may have been directed to extract concessions, but I don't think markets should always consider that to be the case. And when Trump is talking about raising revenue, he often cites trade imbalances. We look at the countries that have the largest trade imbalances. Those include China, they include the EU broadly, Japan, and of course our neighbors, Canada and Mexico.
So, Marta, are you concerned about the economic impact here?
Well, there's a lot of ink that's been spilled around concerns for the economy when it relates to tariffs. I'd a bit more circumspect, actually. So, yes, we have very important trading partner relationships. But when you take a look at US dependence on trade, it's not as severe as you might think. When we're looking at trade to GDP, if we're looking at 2023 numbers, we see the US numbers are around 25%. Compare that to 37% for China, or 73% for Mexico, 67% for Canada. In other words, trade wars hurt other countries far more than they hurt the US. That's not to be said that there's no damage at all. So if we were to take a look at higher input prices, that can hurt earnings. Or if companies were to pass those higher input prices along to consumers, that can edge up inflation.
Interesting perspective there, Marta. We know the markets were rattled this morning. Things did level off this afternoon, but is this the new normal under the Trump administration, do you think?
Well, listen, markets hate uncertainty, and we certainly have fiscal policy uncertainty right now as it relates to trade. And over the course of the year, we may see policy uncertainty as it relates to taxes. And of course, add to that some of the concerns that we've seen around AI. Today's market action actually pales in comparison to what we saw related to NVIDIA last week when news of DeepSeek came out. We've looked at 2025 as a year for potential disappointment in equity markets, and certainly the news so far this year hasn't changed our view there. I'd also add that a lot of folks are pointing to, of course, equity market behavior, but fixed income markets, particularly as it relates to tariffs, are pretty interesting. A lot of folks were pointing to tariffs as one of the reasons that we saw the 10-year Treasury yield edge up over these past few months. But in fact, when we had these tariff announcements at our doorstep, we actually saw the 10-year fall with investors more focused on growth. And I think that really underscores the risk or misguidedness that can occur when investors translate market headlines directly into market movement.
Yeah, keeping that long-term approach is key. Marta, thank you so much for your insight and expertise. And thanks to all of you for watching Market Moves. We'll be back Friday with reaction to the jobs report or before if we see market volatility. Have a great week.